So with that said, I'd like to introduce Rose, I believe, first, and tell us a little bit about American General.
So we are American General. Braun Jones, Rose Sladek. I'm one of the national account managers at American General, and Braun here is your regional support. We're really happy to be here today because this relationship that we have with Brokers Alliance is very, very important to us. And over the past couple of years, thank you, as Eric said, we're back. We're back with a vengeance. We're excited to be here, and in general, but really excited to be here with Brokers Alliance. We love you, Rose. We love you. Thank you, Steve. All right, so I hit the clicker, and it was supposed to advance. There we go.
There we go.
So just a little bit about AIG and the retrospective that is today. In 2010, we had to take a hard look at ourselves and really reinvent ourselves. And because we had the strength, the innovation, and the entrepreneurial advantages, we were able to do things like regenerate employees. We were able to do reconstruction of our individual silos of business that are AIG. We were able to generate a significant amount of revenue. And we also strengthened our Chartist reserves. All of those things put together enabled us to repay the Federal Reserve Bank back 2 years ahead of schedule. Now, I don't mind telling you that when we wanted to pay them back, they didn't really want the money. Why take it early, right? But it didn't matter. We wanted to get it over with. So we're really excited about that. So that puts us in a really good position to continue with our innovation. Sorry. I'm a little bit of a retard when it comes to this clicker stuff. AIG shareholder equity. We're on our way. It is our goal to be the world's most valuable insurance corporation. And as you can see at the numbers at the end of 2010, we had achieved that. That, folks, is a B up there for billion, $82 billion. We also had we were the most valuable organization because of our operating income. At the end of 2010, again, we beat out our competition. That too is a billion, $6.1 billion. So all these things together with our competition, strong operating income, allows us to take the next logical step, and that's innovation in not only product and services. So that's my brief introduction on history and where we're at today. What I want to do now is introduce Braun, who really is, I say we're like the brawn and the beauty of the operation here.
Brawn and brains.
Brawn and brains, beauty, three B's. In this case, it's really the opposite, because I'm the brawn, he's the brains.
Oh.
We've got some pretty complex IUL products, and Braun is very familiar with the intimate details, and he's going to give you a brief overview about how we can help you change the way you're looking at business, help your customers see new and innovative ways to use life insurance as an advantage, not just for a death benefit, but for a vehicle for earning cash as well. Braun?
Thank you very much. I'll take the clicker here from you. How's everybody doing today? Fantastic. It's kind of the wind down part of the afternoon, isn't it? So I actually just got off a plane coming back from Anchorage, so I'm a little bit on that wind down side myself. So if you see me just go over, give me some water here pretty quick, and we'll be good to go. As Rose said, and several of the other speakers have talked about, the Index Universal Life is a huge part of the portfolio that's moving forward in multiple carriers, and we have a great opportunity for you with American General, with our products, and in this space for you to look at the product line. If you're not currently selling Index Universal Life, it's been around for some time, and I highly encourage you to start looking at these platforms and what they can do for your client base. We have some kits on your desk that are around there, and you don't have to go through those right now, but inside there is a retirement reset study. that Sun America, one of our sister companies, had done that really looks to the consumer and the retirement and what's going on in the market space. The consumers really want to have value in their contracts. They want to have cash. They want liquidity. They want protection. They want guarantees. And the IUL market space can help you achieve those. And let's see if we can get this to go here. Why the Index Universal Life? Well, it really came out and about from the term and whole life days universal. You know, term was very finite, but it was very cheap. Whole life was expensive, although it was permanent and had great cash accumulation and had guarantees. People wanted to have something that was kind of that middle of the road, something that was still giving you guarantees or some cash accumulation, but not at the cost of the whole life. Universal Life came out and was able to do that. Now, of course, back in the 80s, it was showing it at about a 14% interest rate, which, as we all know, didn't really hold true. So there had to be some adjustments moving forward, and now a lot of the ULs that you see in the market space are kind of what I tend to call lifetime term. The guaranteed no lapse with no cash accumulation vehicle to them. The Index Universal Life and variables came out after this. The variable life was a very inexpensive product. It gave the clients the ability to actually invest in the market space, put their monies into some different sub-accounts, have great capacity of having the high earnings, but then also have the realization of the downside loss potential as well. And as we also know from the VUL days, when we illustrated all those at 12%, that didn't hold up either. And so now as you walk into your clients and they have these VUL sitting there and they want to take their monies out of their VUL, and you have the lovely pleasure of telling them that they have to fund their policy, not take money out of it because it's not performing to what their previous agent who sold and ran told them it was going to do. The index market is that nice harmony between the platforms that is going to allow your clients to have the potential of putting in their monies into the contract and measuring the growth off of the different indices that they participate in, whether that's the S&P 500, a global fund of which American General was an innovator in the industry to bring to market, or whatever platform that you have. It allows them to go through and have a cap that they can earn their potential to. So if it's a 12% cap and the market does 15, they earn that 12%. If it does 8%, they earn 8%. But it also has a downside floor. So at any of your principal that you've gained over the periods of time, you're locked in, you're set. You're not going to lose your principal gains in your contract. But you have typically a zero is your hero type scenario where you have just the costs and expenses coming out for the insurance, but you're not losing that principal. With our contract, our lead contract, our choice index, we have a 1% guarantee floor in that platform. So why the IUL now? The market has changed. Everything that we knew 5 years ago isn't what it is today. The clients 5 years ago wanted just to have the lowest cost guarantees. They wanted to have some index, or they wanted to have some variable contract that they could put all their monies into and just have these massive gains because the market was never going to crash. It was just going to keep right on going. The market has changed and the clients have changed. From all the studies that we've seen, not just within the Sun America, but a lot of the other studies that are out there, it shows that, again, the clients want to have the cash accumulation in their contract, but they want to be able to protect that cash accumulation within their contract. They want the underlying guarantee set forth. And with American General, we are tried, tested, and true in this platform. If you look at the old IUL, what's happened? Well, as I mentioned back in the 80s, we started out 14% illustrations, and steadily through the years it's gone down to roughly around 3%, maybe 4% in a crediting rate. And you have that standard, steady, methodical crediting rate in your typical lifetime term type setting. Then you have your variable marketplace where you can see all the ups and downs within the marketplace and that high volatility that took place. And the clients don't really want all of that volatility for the most part. They want something more structured and solid. So enter into the IUL space. Now, if you look at the IULs, the actual S&P 500 from 2005 to present credited 3.8%. We had a couple pretty bad years. Our product, if they would have gone out and taken out our lead index over that same platform time frame, we credited 6.5% to our policyholders. Not a bad shift between what the S&P 500 did and what you're able to provide for them within our Index Universal Life platform. And you happen to look at those 2 down years in particular where the S&P 500 tanked, they were down 39% in 1 year, where we were crediting our policyholders that 1% guarantee floor. And again, you didn't lose any of the principal in the previous years. So it's a nice safeguard for your clients. How does the IUL do it with their different crediting methods and models? You have the cap rate or you have your participation rate. In essence, what you have is, again, as I mentioned, you have a cap rate that's specified by the carrier, so your 12% cap rate. And if the market performs below or up to that, you participate in that growth. If it goes down, you have your bottom floor, in our product, that 1% guarantee, so you're not going to lose below that. For the participation rate, you're not really looking at a cap. You're looking at the overall market performance and say 60% participation with our global plan. Then you participate in 60% of that growth without any cap to it. Now, which of those is really kind of the model that is the best, or which methodology is kind of the one that's best for your clients? It really kind of depends. If you take the cap rate and the participation rate and you divide them out, you're looking at roughly a 20% ratio. If you look at that 20% and you think that the market's going to perform 20% or below, typically a cap rate is where you want to be with your clients. If you think over the next period of time that the market's going to perform 20% or greater, then participation is generally a place to go. That's just kind of a basic rule of thumb. But again, it really comes down to your client and knowing your client and what they want to see. Within that retirement reset study that we talked about, a couple of key components. Which of the following areas or actions do you plan to take as a result of the recession? Look into different ways to protect your assets. 58% of the people surveyed said that. How important are the following in the ideal retirement investment or insurance? Guarantees, 65%. So if you don't think your clients are talking about wanting to have the value in the contracts, but also knowing they have some underlying guarantees and safety net provisions in the contract, you might be missing out. You need to be looking at some of these different products for your clients that solve those needs. And IUL can help solve those needs for you. The American General IUL portfolio, as I mentioned, we've been doing this for quite some time. 15 years ago, we entered into the IUL space, so it's not really a new product any longer. Now, there's a lot of carriers that are starting to get into this space. We've been doing it a very long time. We have the hedging expertise, the illustration expertise, case design expertise, and the products that are out there that are innovative that can help you solve your clients' needs. The innovation in the IUL, we have the Elite Index and our Elite Survivor Index. Yes, there's survivorship with an index, so you can actually try to do some planning for inheritance for the children while also providing the mom and dad to have some income during their lifetime at the same time. The Choice Index UL with guaranteed death benefit. It's very unique within the industry. Not many carriers can say that. So we do have a great vehicle for defined benefit, deferred comp, supplemental retirement, that bank on yourself type concept with the guarantees for the death benefit within the platform. We also have the Elite Global and the Elite Global Survivorship. And the global platforms have our global funds that we brought to the market space. And basically what that is you have a look at 3 different indices around the world. You have the Hang Seng, the Euro, and the S&P 500. When the period or the benchmark is either a year benchmark or it's a 5-year global benchmark, when that period of time passes, they will look at the performance of all 3 of those indices, credit the top one with 75%, credit the second with 25%, and just throw away the third. So you're really able to take the entire marketplace around the world, see which funds are going to perform the best while not having to pick or choose which one, and have them credited to your client's contract. Now the Choice Index GUL As I mentioned, this is a great space for us. We're very competitive, and we have different product niches and ability within each of our classes of product, whether you're talking term to IUL, that have a differentiator that stands out to have that conversation with the client. We have the lifetime guarantees, the global indices, the index loans or your variable loans. We have the fixed rate loans, and of course, rolling targets on our permanent platform. So if you have a target that is not fully realized in the first year, second year, if you realize the remainder of that target, you get full commission on that remaining piece of the target. The two different types of loans are out there. Your standard loans. You have a wash loan capability after the 4th year, so basically what you're credited is what you earn and charge, so it's a wash loan. You also have the choice loans or the variable loans, which begin after the 4th year. It's a set rate at 6%, and it gives you the ability to maintain the loan still participating in the indice, and if the indice is credited over to that 6%, you actually can have growth on your loan. So let's say for an example, we have the 6% loan charge on the indice, but the market does 7%. We have a 1% growth on the monies that we loaned out. Now, if it did below that, it did 5, then of course you're charged the 6 on the loan. That's the downside to the variable loan. But you have the ability within the variable loan to maintain it within the indices and participate in the growth if you so choose to do that. The Elite Index, again, one of our products that we came out with back in around, I believe it was 2005 or around in that benchmark time frame. Lifetime guarantees, the standard plus underwriting, term blending, so if you want to bring in some term and lessen the amount of permanent to help maximize the leverage of that cash accumulation within the contract, you can do that. The catch-up provisions, and of course, again, rolling targets. How do we put the IUL to work with your clients? Just a couple of quick scenarios here for you. George is a 65-year-old, boy, I'm going to start needing glasses here soon, I don't know. Is a 65-year-old business owner, and he wants his daughter to continue on the business. The daughter's been involved in the business for over 20 years. Martha, 60 years old, his wife, really has a great affinity for their son, but their son never really had much business acumen. He's a musician, artist, and is very much supported by his family. And I know we don't run across those stories anywhere. So the problem here is, actually, let me go back here. The problem here is the business is worth about $2 million. And again, George wants to give the business to the daughter. Wife wants to treat the son equally. He is still flesh and blood. Both recognize that they have the great gifting ability that runs through the end of this year. And they want to find a way to utilize things and make sure that everybody is made whole. So what do? Well, they can go ahead and gift the $2 million business valuation and that interest to their daughter now. And then, of course, its growth is on her and not within their estate. They take out a Elite Survivor Index policy on Martha and George that's going to allow them to basically take $250,000, lump sum into the contract to start earning some capacity of income down the road for both of them. Now, what's going to happen is as Martha and George move forward and they decide they want to take income from this contract to help support their supplemental retirement, whatever it is they want to do, they can take that income from the contract, but now on their death, they get that $2 million that's going to go to their son, plus whatever value that policy has grown to if it happens to push up that death benefit. So both son and daughter are made whole in that situation, and they did it in a way that also provides income to the mom and dad. So great leverage, great situation for them to be able to do things. Now, one other just quick note to this is if the business was valued, let's say at $20 million as opposed to $2 million, what could we do there? Well, potentially you have a premium financing opportunity where they go through and they leverage the premiums coming from the financing source and they're paying the interest for the policy to leverage out their gifting ability on a much lower basis as opposed to paying the full premiums and the gifting and the gift taxes for a $20 million policy. Another problem. Bill, who's 45, decides that he wants to have an additional $500,000 of life insurance in addition to what he presently has, because he's recently remarried Jessica. And he wants to be able to take care of Jessica and make sure that things are handled for her as they move forward. Now, he earns a substantial income. His retirement funds took, of course, a pretty nice hit as things had progressed in the marketplace. And he's maximizing his 401k, trying to catch up as best as he can. So what does he do? He goes ahead and he purchases a choice index, guaranteed index universal life product from American General, of course. And he pays his premiums for 20 years. Then he's going to be able to take supplemental retirement income from that contract from age 65 forward as need be. And he's got that nice ability then, he's still maximizing his 401k, but now that income from his life insurance policy is going to help try to offset or make up some of that missed opportunities that his 401k has to make up for. So he's got that ability to supplement that 401k loss. Now what happens at his death? Well, that death benefit, that $500,000 goes to Jessica, who he wanted to take care of. And he's already got other policies on the side to take care of whatever other estate planning needs that he has for, if he's got other kids or other things that he needs to handle, those are still in place. And of course, you're going to help them with their beneficiary reviews to make sure all of that planning is done and properly handled. American General, as I mentioned before, has a great product portfolio. It's got a lot of great niches within the portfolio, and every one of the products has kind of a value add to have a conversation with your clients. The Secure Lifetime GUL is our mainline guaranteed universal life contract. That contract is very competitive, and it has something very unique. It has guaranteed cash accumulation in the contract at 2%. So going back to the studies we talked about, and not just from what we're telling you, but from other presenters that have been up here, again, the clients want to have cash accumulation and they want some guarantees within the contract. Give you an example on this platform. A 50-year-old standard male for $1 million of coverage, if he has this contract in the 10th year at 2%, he had $15,000 of guaranteed cash. By the 30th year, he had $150,000 of guaranteed cash, so at his age 80. Now, it's not a slush fund, but it's options and opportunity for him to do different things. If he's got to have a premium payment come out, he can do that. It's also an option and an opportunity for you to go back and to have a conversation with your client to review his contracts and his policies and make sure that if there's a new product that comes out, a new feature that comes out, you have the ability to take that cash value, 1035 exchange it into a new contract, and leverage that so that he's not paying full sticker price on that conversion. So you have the ability, instead of making that one-time, lifetime UL sale, to get back in front of the client repeatedly and have that conversation on a continual basis, reviewing the contract, seeing if things have changed, and making sure that he knows or she knows that they have intrinsic value in that contract, and it was a good buy for that point in time, but you know what, now there's something else that we can get you to where you need to go in a different way. The Choice Index Guarantee UL we touched on. We showed a couple of planning tools and opportunities for that. The Choice Index GUL is unique in the aspect that it is our mainline product that really helps you, again, define benefits, deferred compensation, that bank on yourself, minimum death benefit, maximum funding, get the cash value rolling out of the contract, age 65 through, but it has the lifetime guaranteed death benefit to it as the underlying source of safety for the client. And of course, it has the 1% guarantee in the indice fund as well. It's a great conversation to have with the clients. The Elite Global Plus is the mainline product for premium financing, for split dollar regimes. It's got a supplemental retirement feature to it. It has the global indices to it. Our Choice Index, by the way, also has not only the S&P 500, but our 5-year global index if they choose to utilize that indice within that product. But the Global Plus has a 1-year and a 5-year global indice that they can utilize. It has a high early cash value product or a high early cash value rider to it. And it's a great platform for you to be able to really maximum fund in a short period of time to gain maximum cash value down the road. The selected term product, very unique in the industry, where we offer multiple levels of term duration throughout the contract. So you can do a 10, 15, 20 through 30-year term. And you don't see typically the situation where somebody needs a 27-year term. but I guarantee you that if you actually sit down and plan with your clients, you will find a way to make these products work for you. For an example, if you're laddering with your clients for their term platform, you can go through and say, okay, I understand that you have $1 million need for 30 years to cover your mortgage. Your son's going to be graduating in 27 years. Your daughter's going to be graduating in 23 years. Whatever that need might be, we can plan it all out in one product, $1 million for 30 years, and get that done. If we actually go back and write the 3 separate contracts, or 4, whatever it is, to the actual needs of the client, in the initial onset, the premiums might be at or a little bit higher than what the one contract would be, but once those other policies start falling off, you can save tens of thousands of dollars to the client, and then that found money is something you can come back and have a conversation with your client on, saying, we saved this amount of premium dollars for you. Where else can we invest those dollars for you? Where else can we put them? And we make it kind of easy for you to do that too by utilizing an intake form that allows you, as long as you have the same owner and same beneficiary, you can go ahead and put forth, I need a 27-year term for X amount. I need a 23-year term for X amount, a 15-year term for this amount, and a 30-year term to cover that remaining amount for this amount. You take one application, we'll issue all the policies. So it doesn't duplicate your work in any way. Now, I would challenge you that when you do the laddering strategy with your clients, and if you're actually helping them plan to the need, take it the one step further. Every client that you're working with has an underlying lifetime need of coverage. Whether it's $100,000 or $500,000 of coverage, they're never healthier than they are right now, and it is never cheaper than it is right now to write them a subset of that coverage in a permanent policy, whether that be an IUL or whether that be a guaranteed UL. And it's a great way to go ahead and get their feet into the water to start there. And again, if you write with our contracts, especially our guaranteed UL, the secure, you're going to have that cash accumulation. So if the needs change and you need to make a change, you have that cash value within the contract to do it. The ROP, same thing. We have multiple years and iterations that you can go ahead and write the term variations on the ROP platform, all the way up to a 35-year ROP. And if right now you're not selling return of premium, it's because you're not showing it. If you start showing return of premiums, your clients will look at it and they will utilize it. If you show them the cost of the term, it's a yellow pad sale, show them the cost of the term, show them the ROP cost, give them what that premium is going to be returned to them at the end of the 20-year period of time and what that ROI is, and they will look at that, because if they try to do that, it's going to be about 4 to 5% that they're going to have to invest in today's dollars. And they might say, well, I'm just going to go ahead and buy a term and invest the difference and just take the regular term. How many of them actually do that? Not many. Now you know that they're going to do this. Show the ROP. Show it for the buy-sales, the key mans. Show it for your divorce decrees. You have somebody that was told that they have to have amount of coverage on themselves in case they die for their spouse, and for whatever reason, in that cantankerous period of time, the last thing they want to do is spend a nickel towards their ex. If you tell them all you have to do is live and you get all your money back, they don't get anything, all of a sudden they're ready to sign. It's a nice little niche sale, so it's a psychological sale. Advanced marketing programs. Lean on American General, lean on your partners here at Brokers Alliance, and work with them to find the true partners that can work with you in the advanced markets arena. Our folks are fantastic, and they're readily available to help you and help with the design and implementation of cases. We're there to improve the presence in the market space, work with the advanced sales, the product development, the operations, expand and coordinate with you all, and get the desired result of what you want, which is getting those cases designed and issued. I have a couple other little quick things I wanted to mention before we get too far into this next piece here. We do actually have a survivorship product, a guaranteed survivorship product that's going to be launched at the end of this month. If you have cases that you're working on now that you would like to get quoted out on, we can certainly give you the quotes for those, and we can start working on the underwriting aspect of those quotes and start moving down that road for you. But we are definitely in the survivorship market, and from the quotes that I've seen on the platform, it's extremely competitive. So we're very excited to get it launched and really get that announcement out for everybody. So if you do have any of those estate planning cases, work with your partners, and we'd love to get you those quotes out. Also, back on our term platform, We have what we call the Select Income Rider. Now, the Select Income Rider, you heard a little bit about it from another carrier, but basically what it is you're buying your death benefit and a single premium immediate annuity to fund for your clients an income installment from 5 to 40 years. So you got $1 million of coverage, you want to have $250,000 paid up in a lump sum, and then you want to have the rest as an incremental installment by month, by year, however you want to have it, from 5 to 40 years. You can go ahead and do that within our term platform and have that happen right now. Now, 2 things for you. First and foremost, you can do it for that income replacement strategy. You can take it and utilize it in a way that makes American General much more competitive than some of the other cheaper terms that can be out there. Or you can also use it on the save side. You have somebody that came in as preferred, they go back to standard. Now you can go and blend in with the Select Income Rider and with our multiple levels of term offerings and get real close to that premium you originally quoted that client. I had a case a couple of weeks ago that the client came in for preferred, and they came back as a standard class. For the amount that they were applying for, it actually was a $900 increase in premium. By leveraging this, that offset was $300. They kept the duration of term the same period of time. They didn't want to decrease the amount of term, but if they chose to decrease the amount of term, we could have massaged that number down as well a little bit. So you have a lot of options and opportunities with the products to really plan and fit the portfolio for the clients as you need be. Another thing with the cash accumulation for the clients, if you look at the index UL in particular, but also on the guaranteed UL, since it's going to have that cash accumulation on it, you don't necessarily have to have a long-term care rider that triggers off of 206 ADLs. Generate cash accumulation in your product and take the cash out. Make a withdrawal. Make a loan from the contract. You don't have to trigger 206 ADLs. It's your money. Take it. Utilize the contract. Maximum fund that IUL, and if you need it, pull the money out.
Want to take a break on it?
The AG Quick Ticket. Did you want to talk to the AG Quick Ticket?
Well, what I was thinking was, Braun talked a lot about all the different products that we have, again, just being innovative to what the different needs are. He mentioned briefly our reset study. One of the charts that was early on talked about what the answers to specific questions were before and what they are now. And I think what's important to point out is that reset study was something that we did or that we had done for us 10 years ago. And we looked at the benefits 10 years ago. And then we looked at the benefits just last year. So within 10 years, our consumers have changed their minds on what things they're looking for, the products they're looking for, and the needs they want to fulfill. So if you want to look now at that packet that we had, inside on the left-hand side is a packet called the Reset Study. There's a lot of really good information in there that talks about the consumer today, the things that they're looking for, the products, and the need that they're looking to fit. There's a lot there. You don't have to just kind of browse through it, but there's a lot of really good information, and we can get you more detailed information if you want it to really understand the consumer.
You want to talk to that too?
Yes, thank you. American General is starting something called a Roadshow, something you've heard about before, I'm sure. We're going across the nation, and I think it's 13 major cities. Phoenix is one of them, Dallas, Houston, New York, all of the major cities, LA, San Diego, Minneapolis, South Carolina, there's Charlotte, one of those things. So depending on where you were, and I talked to some of the agents at lunch today. I know I met one from Houston and one from Dallas. We're having an AG Roadshow in your area. If you want to know a little bit more about American General, more products and services, more about the thought process behind the products that we're developing, understanding underwriting, you're more than welcome to go, and Brokers Alliance has all that information for you. So if you would, just send an email to Jessica, or I don't know if they're going to post it on their website of all the various locations, but I would encourage you to do that as well.
And the Phoenix meeting is here in town on April 24th.
So having said that, we're talking about Roadshow. Anybody want to go to Bermuda? I do. I don't get to go, but you do. This is an agent incentive, producer only. $200,000 qualification minimum, and you get an all-expensive paid trip to Bermuda. This is something above and beyond what you're already getting, your comps and such, from your agencies. This doesn't go to Brokers Alliance, it goes to you. So again, being innovative, trying to reach the consumer, the only way to reach the consumer is to reach you, the producer. We understand you're our feet on the street. You're talking about our products, or you're just talking about a need in general. We're hoping that you'll pick us. We're hoping that you see the value here. So unless there's any questions about some of the products and things that Braun talked about, because there is a lot, what I would like to, if it's okay with you, I'll continue going on with the AG Quick Ticket. But if there a show of hands, does anybody have any questions on some of the products that we talked about earlier? So our AG Quick Ticket is innovative. That seems to be the buzzword for us today. But it's an online application. The bad news, and I'll be completely honest, is it's single carrier. It's just for American General. It's not a multi-carrier platform. But the good news about this is that it's our, what we consider transactional UL, so the secure lifetime, the ROP, and the term product. So if you are running a quote, and by the way, our Rapid Rater is now available as an app for an iPad. You can put it on your iPhones, and you're running a quote, you can look at that quote and you can easily go online and enter an app. The best part about that is it's about 20 index fields, so it's maybe the equivalent of an app and a half. Basic information, critical information for your client that you can enter into the web screen. And I know that you can get to it from, you have to have a login and password, but it's very easy to do. And then we're dropping a ticket into the paramed provider. Everything else from that part for you is completed at no cost to you or no cost to Brokers Alliance. We see the value in what we call a turn and burn. You've got clients, you're out there, you're selling. Why get bogged down with having to chase down a lot of things? So if you can get to the website, enter a quick ticket, hit submit, and off you go. There's a lot of value on the website in doing that, because once you sign up for the quick ticket, there's a ton of things that are on our website, like you can look at your pending case status. And again, I know you get a lot of that from Brokers Alliance, but maybe you're one of those guys who likes to work late. Maybe you're done sales all day and you're inputting things at night and you're looking at what's going on and preparing for your next day. If you are using the AG Quick Ticket and you have a login and password, you can get all that information on our website. The examiner does the tele-interviews for all the Part 2. They're going to ask those questions, so you need to set expectations. You need to tell your client, hey, by the way, an exam provider is going to be calling you. They're going to ask some questions about your medical history. And by the way, they're going to come out, they're going to collect with your fluids, they're going to collect your signature. So there's really no work to you. It's quick, and we really are excited about it, because I think it's one of those innovative things that's going to take us to the next step. The key here, no cost to you. We're keeping all of the apps, what we call IGO, another buzzword, but in good order, making sure that all the information is there that we need, critical information to move forward. It's less evasive for the customers. A lot of times people don't like to give up specific medical answers, but they're more than willing to talk to somebody on the phone, or some stranger that shows up to draw blood and take a urine sample. Somehow they're willing to give questions to them that they may not give to you. Very, very easy to access, again, via our eStation website. Whoop, I think
to one thing that Rose had mentioned, our Rapid Rater tool that is on the Apple Store, the Droid Store for your smartphones, your smart pads. If you go out and you just search for AGLC, American General Life Companies, you can add that for your phone. It does a quick rate quote for the term, for the ROP, right, for the guaranteed UL. One thing it also does is it will compare term versus ROP and give you the ROI on that sale right there. So it's a nice, quick, easy tool, and then you transition from that, log in, and do the
that is actually, there's a lot of value in that, Braun. I'm glad you brought that up, because what we see, and going back to his earlier comments, is, in today's market, the consumers are looking for something that's low price. But when you say, this is going to expire in 10 years or 12 years, so maybe let's put a little bit more into it and by the way, let's get your funds back. We have different examples of parents that will buy it for their child. Again, in the case of their demise, they want to make sure that their child goes to college. But guess what? If there was no demise and they're still living, they bought an 18-year ROP, in 18 years, they're not only going to get their premiums back, but now they got some funding to pay for college. So there's a lot of very innovative type things to do with ROP. We're seeing a lot of it these days, and I would encourage you to take advantage of that. So looking at the Rapid Rater, something easy like that that you could pull up on your iPad, by the way, you look really cool, and if you have pictures of your own family, it makes them feel real that you're out there doing the same thing that they are. That's it. Oh, this is our disclaimer.
Yeah, that's a legal compartment's contribution.
That's all we have. We were going to try and make it a little bit shorter than the hour. We wanted to allow for Q&A. There's a lot of information here, and it's been a long afternoon, so unless there's any specific questions, I'm going to be here for the rest of the day. I'm going to join you for dinner and cocktails. Braun, unfortunately, is taken off. He's still on Alaska time.
I'll be around here for a little bit. I'm still on Alaska time, so trying to recover from that.
And anything in your packets that you have questions on, come look for us.